Hello and welcome to Chapter 17. Chapter 17, we're going to talk about process costing. Process costing is a little bit different than job order costing. If you recall, in job order costing, we looked at what I would call our heterogeneous production processes, or processes where each product or each material looks different than the next. Recall we talked about cars and car wrecks, and when each car gets repaired, it's a specific job order cost project that we're trying to look at. Process costing by nature is going to be much more of a homogeneous production process where all materials look the same. Imagine going into the store and looking at Campbell's soup. If you buy one can of Campbell's soup, so long as it's the same size, it looks the same as the next. That's a homogeneous or the same process. So we're going to specifically focus in on process costing. In our learning objectives, we're going to talk about the basic characteristics and cost flows associated with process costing and manufacturing. We're going to look at equivalent units, and we're going to look at the weighted average method. Now, it says here FIFO method as well. We're not going to look at the FIFO method for this class. Most organizations don't use the FIFO method, and so we're going to focus primarily on the weighted average method for what we're going to look at through this discussion. And finally, we're going to do a departmental production cost report um, that looks at the weight using the weighted average method. So, what are the characteristics of process manufacturing? Uh, each product within a product line passes through processes. In other words, steps in a manufacturing process. Imagine a car manufacturer, a car, it has different steps. Maybe the first step is to put the tires and the frame on. Then the next step might be to put the body on, the shell of the body, and then maybe you're putting in a dash. But it's what happens is along that manufacturing line or process steps, they're going to do different things as they make a car. Different than what you'd see that we talked about earlier, different than what you would see in a job order cost system, where in a job order cost system, each product, the car is probably going to sit in one spot, and the parts are going to come in from different areas to be assembled into a car, from the paint booth, etc. And so process costs, as we touched on earlier, are homogeneous products, and that we're going to talk about specifically. Remember Campbell's soup. So here's an example of a drug company that makes that's a sequential process, and it's going to be things that we want to take a look at. Sequential processing. They're going to mix the drug. They're going to encapsulate it. They're going to put it in a bottle, and then the bottle is going to go in the box. So you can see this exactly the same thing for Campbell's soup or cheese sauce. And in this case, it won't be encapsulating, it might be canning and then a box. You might not have this middle step here, this one. But essentially, you're going to create something, but it's going to look exactly the same for each one. Now, this is sequential processing. The next one is parallel processing. And what you have here is you have two independent steps that are parallel that have to happen at the same time. And then when they get to assembly, we're going to put them together. And ultimately, we're going to make finished goods. So we have two components that are getting put together at individual spaces. And then they're assembling them together. So if you think about this from a car manufacturing perspective, maybe they have parallel processes for putting the doors together and putting the engine together and then assembling those into the car. That would be a parallel process or sequential process that they're doing before it becomes finished goods. Anything before in this little arrow right here, anything in this spot would be considered work in process. It's not finished goods because we don't have everything done with it. We're going to talk a little bit more about that as we get through this, but work in process are products that are unfinished. Think of Campbell's soup in cans without the label and in the box. That's going to be work in process. So, what's in common? Regardless of the processing pattern within a firm, all units produced share a common property. And here it is again. They're homogeneous. They do the same set of processes, and they produce in a period at the same unit of cost. And we want to figure out how these unit costs are operated within a manufacturing environment. And we go from there. And these are really more actual costs than they are standard costs. Because we about this earlier in a couple chapters ago, where we calculate a standard cost, or what it costs us, the expected cost to produce the product. These are actually going to be actual costs that we're going to calculate here. So, how does cost flow through a system? It's different than It looks similar to what's in a job order cost system, but it's different. All raw materials are purchased the same. You're going to debit raw materials inventory and you're going to credit accounts payable. And when you issue them, you're going to issue raw materials, direct labor, and overhead in the work in process the same. And when you finish something, you're going to transfer it out. And a lot of this with process costs, you might have two or three or multiple work in process accounts, where in a job order cost system, you only have one. When they're transferred and finished out, they go to a finished goods account, which is the same. And when they're sold, you typically are going to do a four-part entry. Even though it doesn't have the revenue part here, you're going to debit accounts receivable if you sell it on account, and you're going to credit sales or sales revenue. And you're also going to take it out of your inventory, your finished goods inventory. You're going to credit finished goods inventory and you're going to debit cost of goods sold. So they look very, very similar to what you would see in a job order costing system. So we're not going to go through all those journal entries. So here's how the flow works. Same kind of deal. This is the same pictorial that we saw earlier. You have materials that you put in the mixing department and you apply some overhead. So what you're going to have here in this particular process cost, you're actually going to have three work in process accounts. You're going to have the mixing department, the encapsulating department, and the bottling department. And the final place is when they put it in the box, it's going to go to finished goods. And you can see what happens. We transfer from this department, which you have labor and all the materials, plus some applied overhead, to the encapsulating department. And then it transfers from that department to the bottling department. And you have direct materials, direct labor, which would be bottling labor, encapsulating labor, and mixing labor, and then all these applied overheads for each one. So you can apply overhead at each stage in the process. So how do we calculate cost? What do we look at here? It's pretty simple, right? We're going to calculate these costs. The first one, is $2,200. So once we transfer this, when we're done with whatever's going to happen in the mixing department, we're going to put $2,200 in the mixing department. And then we have another 1,560 in the encapsulating department. We're going to add that to that, so it's 3,760. And then we're going to put it in the bottling department, and we're going to add another 1,700, so it's, I don't know, 5,460, give or take. So that's what it costs us to produce 2,000 bottles of multivitamins. So let's look at the dollars in the journal entries and see what happens. 2,200. This is the sum total of the costs. Those are costs added to the encapsulating department, plus the costs incurred in the encapsulating department, gives you 3,760. And then we transfer those from the encapsulating department to the bottling department, and we add those together and we get 5,460. So here's just the journal entries as we move them from one department to another. And finally, we put it into the finished goods. But it's really not finished goods. We're missing something because the bottling department didn't have the boxes. But you understand the concept here. We're taking these pure dollars, we're taking them out of work in process and putting them into our finished goods inventory. So when we sell that, if we sold all those, we're going to credit finished goods inventory and we're going to debit cost of goods sold. And what this really said, we produced 2,000 bottles. So our cost would be about $2.73 per bottle, $2.73 per bottle if we do the math. So in process costs, are accumulated by department for a period of time. And sometimes if you might look at this by a particular part of a line, might be a good way to look at it. So you might have a complete manufacturing line like we saw in the last one, which is mixing, encapsulating, and then bottling. That might be a line end to end, and costs are accumulated by department or process within that line. And we're going to use a production cost report. It says production report, but it's really a production cost report. In some texts, they'll use that to determine how much cost remained in work in processes and the dollar amount of the costs that go to finished goods. And what you have is you have a breakdown between units and cost, and we want to look at how these work for each in a production report or production cost report. And it traces the flow of the units and it traces the flow of the costs. And we do some calculations to come up with unit cost, or what we're going to call equivalent unit cost, as we go a little further. So traditional manufacturing firms have significant beginning and ending work in process inventories, even though it says on the other hand, just traditional manufacturing costs may have significant work in process because their process costing is complicated with all these beginning and ending work in process accounts. So what we want to do is we want to figure out the unit cost for the work performed during a period in each department for this production report. The unit cost is needed to compute the cost of what we transferred out into value, the ending work in process inventory, but also to value your ending finished goods inventory. So we calculate it, we just divide the total units, the total cost divided by the total units. But remember, we have some complicating issues here. We don't know what we don't know exactly what units, because some units, at least the ones that are partially finished, we have to figure out what the equivalent units of finished would be for those, and we'll talk about that in a minute. And how do we treat the cost? And you notice here in the bottom there's a sentence, and I elected not to cover this part. It says there's two methods have been developed to solve this problem to come up with the value. One is the weighted average method, and the other is the FIFO method. As to not complicate our discussion, we're only going to cover the weighted average method. So when we take a look here, by definition, anything that is ending work in process is not complete. So it's going to be some percent less than 100% complete. And a unit that is complete and transferred out during the period is not identical or equivalent to one ending work in process. That means that those units are going to be 100% complete, and the output for the period must be defined. So we have to figure out, based off of these units, how many units we truly produced. But what we have to do is we have to calculate some kind of an equivalent unit of production. And what that means is we have to equivalize it as if they were full units of production. And we're going to apply some math to that. And once we take that equivalent units, we're going to take the transferred out as easy if that's a 1-for-1. If it's transferred out, it's 100% complete. So there's the equivalent unit is 1 for every unit that was transferred out. And the transferred out unit is an equivalent unit. And the ending work in process is not complete. So it's some percent completed, and we're going to eyeball or estimate what that really means and what percent to complete that is. That's a big deal for what we're trying to do here. So let's look at this top one. It says, so if you have 100 units completed, that's equal to 100 equivalent units. If you have 200 units that are 50% complete, that's equal to 100 equivalent units. So it's the fractions. So you have, if they're completed, that means they're 100 equivalent units. That means they're 100% done. So you take this 1 times that, and here you're going to take 200 times 0.5 to get you the 100 equivalent units. Now let's look at this bottom part. I don't know why they're together, but they're together and they shouldn't be. It says you have 100 units completed, so this is going to relate to this top one. You'd say, well, that means that there are 1,000 that they're completed, and you have 600 units that are 25% complete. So you're going to take the 600 times 0.25, and that says that they are 150 equivalent. So when we do our math for this bottom one, we're going to take 600 units and multiply it times 0.25, which will give you 150. So that's going to be our calculation for equivalent units. Let's go look at it here. So we have 1,000 units. That's 1,000 equivalent units because they're 100% complete. And on the bottom, you have 600 units, but they're only 25% complete. So that tells you to have another 150 equivalent units. So we have a total of 1,150 equivalent units of production. So now that we have that, we can take a look and we have our total manufacturing cost. And this includes direct materials, direct labor, and overhead for the purposes of what we want. And we're going to calculate our unit cost. So we have 11,500. We already calculated that we have 1,150 equivalent units of production. So we're going to take the 11,500 divided by the 1,150, and it's going to give us our total cost. So here's what we have. We have 11,150, and it tells us our equivalent unit cost is $10. But what we want to know is how much do we transfer out? It's $10 times 1,000 equivalent units, or $10,000. But we have another 150 equivalent units that are still sitting in inventory. So we're going to take $10 times 150 equivalent units. It gets us $1,500 is the value of stuff in ending work in process. So we're going to look at, there's two different ways we can do this as far as making a calculation, and we talked about this earlier, but we're going to focus primarily on this weighted average costing method. There's also a FIFO method, but I want you to just understand the basics of the weighted average costing method. So what we have here is we're going to look at the weighted average cost, takes the beginning inventory cost and the work during the current period to calculate this period's, the current period's cost. And so what it's saying is the costs are carried over from the prior period account as if they belong in the current period. and the beginning inventory work costs are pooled with current costs to come up with an average cost. And so what this is continuing on. So what we've done, the weighted average cost treats beginning inventory costs and accompanying equivalent units as if they were all in the current period. So we don't go backwards. It's all one big pot is what it's really trying to say here. And the output is the same. So you're just calculating equivalent units that way. So let's take a look at our example. So we have to start at the beginning of the period, we had 20,000 gallons in inventory. We had another 50 that we transferred out, and we had 10,000 that we had left. So what do we know total? We have to figure out how many units, and we had cost that we had 3,525, and then we added another 10,125. So we completed 50,000, and we have 10,000 left. So we know we're going to account for 60,000 units total. So let's take a look. We had 10,000 that were 25% compete 0.25, and we add to that the other 50,000 if we go back that we transferred out right here. And that says that we have 52,500 units that we transferred out. Now, this part to me is confusing on the bottom. I would just look at it to say, look, we had 50,000 that we transferred out plus the 25% of the 10,000 equivalent units. That's where the 52.5 comes from. I would ignore all this stuff on the bottom and just look at that calculation and you should be good to go. Now we have costs, we have total manufacturing costs. We have beginning work in process, and then we also have costs that were added in July. And you remember that's direct materials, direct labor, and manufacturing overhead for a total of 13,650. And we're going to take the values that we calculated, 26 cents per equivalent unit, and we're going to multiply it times the 50,000 equivalent units that we transferred out, and it gets us $13,000. And the 26 and the 2,500 equivalent units times the 26, and it gets us 1,650. And you notice, or 650, excuse me. But if you notice, this number and this number balance. So all we've done is we distributed them. So the value of our ending work in process is 650, and the value of what we transferred out, or what's going to reside in the finished goods account until we sell it, is $13,000. Now we're finally getting to the production report, and the reason that we went through all those other steps is that you can understand what's going to happen in the production report when we get here. We have 5 steps. We have the physical flow analysis. We have the calculation of equivalent units. We look at the computation of the unit cost. Then we're going to do the valuation of inventories and what transferred out, and then we're going to do a cost reconciliation. So I'm not going to spend a bunch of time here, but you can pause this and read through this. But what you have is simply this: what we started and completed equals total units completed less beginning work in process. And units started and completed plus any work. Just go through the formula. That's probably the best way to look at this. And we're going to get to a schedule here shortly, if my mouse will work. We're going to get to a schedule here shortly. Whoop, went too fast. That's going to show us that. So here's the physical flow for the first one. We have the numbers here, and you're probably going to have to go back and forth in this a little bit. But we have 20,000, 50,000, and 10. So we know we're going to account for a total of 60,000 units. Well, we had a beginning work in process. We know that we had another 40. We kind of backed into that, even though it doesn't really show us that, because we had 50 plus 10 gets us 60, right? And we know that we're accounting for 60, and we know that we had 20 that were in the beginning. So we kind of backed into this 40,000, even though they don't show it that way. That's truly what happened. And we had 30,000 that we started and completed, and we had another 20 in beginning work in process. There's an ending. So there's our reconciliation of 60. And if we go to the next slide, now we have to calculate equivalent units of production. And we're going to look at that. And it doesn't show that here, but that's the next step. And then we're going to compute the unit cost using the weighted average method. And then we're going to look at the valuation of inventories, and then we're going to do a cost reconciliation. You can stop and read through these, but I want to get to the production report that you're going to see when we prepare it. And that's what we're going to look at now. We're going to combine all of these steps into a production report. So here's the physical flow in the equivalent units, and we're accounting for 60,000 total. And then we have The cost to be accounted for, the initial 35.25, which was in beginning work and process, then another 10.125, so we got 13.6. So our cost per equivalent unit is 26 cents, and then our cost to be accounted for is 13.6. It's broken down between 13,000 that we transferred out, and then what we have left in any work in process, and we're taking that times the 2,500 equivalent units. You can see down here in the bottom, times the 2,500 equivalent units to get a 650, and this 1350 balances back, and that's really your reconciliation cost. If you have multiple inputs in multiple departments, what it's really saying here is that you don't have a uniform application of cost. Typically, you might have raw materials introduced at the beginning of the process, and that's it. And then beyond that, you're going to have somebody modifying them in some way or another. And you're going to use something called, so you have a breakdown between the cost between direct materials and something called conversion cost, which encompasses direct labor and manufacturing overhead. So we're going to look at the same kind of thing. And you notice here, direct labor input is usually needed throughout the process, and overhead is normally assigned as part of direct labor. And typically, direct materials are not assigned uniformly through the process. So that's going to be a little bit different. But let's take a look. We're going to do a different thing that with non-uniform application, and we're going to look at a production report. So here's our new production report. This one's a little bit different. It says the same equivalent units, but you notice what we did now. We have costs. We have it broken down between materials and conversion costs. And the materials are direct materials costs, and the conversion costs are labor and overhead, direct labor and overhead. And then what we added, so we're going to have a total of $17,000 in cost, 1,520 plus 1,800, and then we're going to use these to calculate the equivalent units of production. So here's our next step. And what we have is we have different equivalent units of production for materials and conversion. So then we're going to take the dollars for materials and conversion. If you go back, that's how they're separated. And we divide them by different equivalent units. So this is just a step further than what we did before, where before we had lumped conversion cost and direct materials into one bucket, and the equivalent units as one total. Now we're separating them out. So it's just another iteration of the same process that we've been following. And then we're going to value the inventory between for ending work in process and transferred out. The ending work in process, we're going to take the 17 times the 80,000 times the 20,000 that are ending work in process. So you're taking 17 cents, which is here, times the ending work in process, which is 20,000. You get $3,400. And you're going to take the nickel, which is the cost per equivalent unit for conversion cost, and multiply it times 8,000 units, it gets us $400. And you sum the two and you get 3,800. That's what's going to be your value in ending work in process. The difference obviously is going to be what was transferred out. And here's the same thing, but in a production report or production cost report. And now we have extra units, and I would encourage you to spend a little bit of time on this slide. That's it for chapter 17. Congratulations if you made it this far, and I wish you well in the remainder of your academic career. I've enjoyed having you. I hope you have a great day and a good rest of the semester and you enjoy your summer.